Moving on to global, 3 weeks after it outlined its much publicized roadmap for living with COVID-19, Singapore is returning to a partial lockdown for a month. On the other hand, surging sales of fashion lines and handbags by Dior, Fendi and Louis Vuitton, powered by LVMH's revenue in the second quarter as coronavirus restrictions eased around the world. More stories on today's International Minute.
3 weeks after it outlined its much-publicized roadmap for living with COVID-19, Singapore is returning to a partial lockdown for a month. The city-state is recording the new many cases of the virus in 11 months, with growing clusters around nightlife venues and major fishing port causing alarm. The country is reverting into the tight restrictions it had in place during May and June, shutting down dining in restaurants, closing indoor venues such as gym, and limiting gatherings for 2 people only. The development is a step back to Singapore's ambition to start dealing with COVID-19 as it would to influenza and treating it as an endemic and manageable disease rather than a pandemic. Sales at Giorgio Armani jumped by 34% in the first half of 2021 as business in China and the United States helped the Italian fashion group bounce back again. Although it said it could be next year, but it fully recovers from the pandemic. In the first half of the last year, in fact, Armani's company had seen a 25% decline in sales that had led net revenues to fall to 1.6 billion euros. However, with strong recovery, the company is expected $4 billion in induced turnover and 2 billion in direct turnover by the end of 2021. Surging sales of fashion lines and handbags by Dior, Fendi and Louis Vuitton powered LVMH revenue in the second quarter as the coronavirus restrictions eased around the world and the luxury goods group edged out some rivals to raise its market shares. The Paris-based luxury goods titan reported revenue of 28.7 billion euros or equal to $33.9 billion for the first half of 2021, up 56% compared to the same period in 2020, with such gains driven particularly by accelerated growth in the second quarter of 2021. LVMH revealed that the fashion and leather goods division, which is the largest business group, achieved record levels of revenue with organic growth of 81% compared to 2022. And went up 38% compared to 2019, with the sales in the US and Asia went up sharply. Tesla Incorporated posted a bigger second quarter profit than expected, thanks to sharply higher sales of its less expensive electric vehicles as it raised prices to boost its margin on them. Tesla reported Monday and $1.14 billion in net income in the second quarter, results that blew past analyst expectations and marked the first time the company's quarterly profit on a GAAP basis has passed the 3 threshold. The result pushed shares up more than 2.2% in after-hours trading. Tesla was able to beat expectations and log its 8th straight quarter of profitability, even it has grappled with supply chain challenges and losses stemming from its Bitcoin investment. Operating income was $1.3 billion, which increased year over year from $327 billion due to volume growth and cost reduction. Prices for the high-end beans favored by Starbucks corporations and other cafe chains have surged more than 30% in the week. Those sky-high prices are because coffee trees in Brazil was weakened by a drought, then plummeted by 2 frost in less than a month. Freezing temperatures last week especially hurt young trees which will end to be trimmed or replanted, which will affect output for the years. Other major growers are going to reap less coffee than expected too, like Indonesia, which is seeing a light crop. Projections for losses so far are substantial, and the frost on July 20th probably erased around 3.45 million bags of output in June of the south of Minas Gerais, which is Brazil's main coffee growing region. IDX Channel reported.